Morning. Happy
How's it
Tuesday. Cheers.
going? The
What
sun is
does your cup
shining.
say?
So it's one of my favorite verses, and I have this on the wall too. It's First Corinthians 16:14 from the Bible. Let all that you do be done in love. It's basically from the love chapter, just to be kind and
Okay.
loving and, let your intentions be good, basically.
I love that. I
Yeah,
I have business today.
that's
So we had
good.
this company come in, a home and flood insurance company, and we get some really cool swag sometimes. And I am drinking from one of their tumblers, which surprisingly,
I
without
love
the top on
this
it,
swag.
ew, I love a good tumbler. Most
Yes.
people are like, oh, another tumbler. I will take another tumbler. I don't know why I need it, but I need it. I
Well, they
love
get
them.
lost. They get lost or they get messed up or somebody takes them or just it's always good to have extra.
Always,
It's not a
always.
bad thing. Well, okay, so happy November. Can't believe
Happy
it's November.
November.
It's
I
insane that it's
know.
already November. I just ordered all my Thanksgiving stuff. Um I so wanted to go live today and talk about the question that we get asked the most this time of year. I would say every fall season, winter, the question is typically the same. Like the nuances around it are different based on what's going on in the world and what's going on in the current market. But do you know what that question is? I bet you even know what the question is.
Oh, I get it all the time. All the
You
time.
say it.
I get 2. I
What's the
get
number
2.
one question? What's the number one question we get asked
Okay.
this time of year?
Do I wait for spring or do I buy now?
Yeah, ding, 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 ding. Music
That
going
and
on.
we
Insert
have a couple others.
applause. What was that?
I know there's a couple others, but that is the main one that's
Yes.
trending right now. What
Yes.
do we do? And within my side, it's on the mortgage side, they want to know what's happening with the
Right.
rates. So we can touch base on that, but that is the biggest question because what is that going to look like the rates today versus the rates in the spring? We all know everything's declining. So do they want to wait for spring and have better rates and what that looks like? I love the conversation because as soon as I open up someone's eyes to the bigger picture,
Mhm.
they're like, "Oh," that their response is always, "Oh,
Mhm.
I didn't think about it that way."
Right. Well, here's the thing. When someone says to me, "Should I wait for spring to buy?" Like I'm one of those that like, what's that deeper meaning to that question? The deeper meaning, "Hello Timothy, so good to see you." The deeper meaning of that question is, am I making a good decision right now or am I going to feel stupid buying now and like the rate comes way down in the spring or something? And the short answer is always, here's the thing. The one number you want to really look at for sure is the price of the home and what we can get you into the home for. Because the rate is what it is right now, but you can always refinance. So you buy now, and let's say the rate does come way down. The nice thing is, instead of getting out there and having to compete with everybody, all you have to do is call your lender and be like, "Hi, I'd like to refinance." Like the solution is really easy. Hello, Stater family. Thanks for joining us. Tell us where you guys are from too when you're coming in. So that's the big question I think that people have is everyone wants to make a really good financial decision. And I think our job is to help them feel comfortable and confident that this is the right time to buy. So I think that's what we want to jump into. And you know, from my side of it, and then I definitely want to hear the rate conversation because I think that's what everyone really wants to know about is the rate. Hi from Australia. That's amazing.
Woo!
We're in the
I
United
like
States. Yeah,
that.
tell us. Tell us, yeah, and tell us what's going on in Australia. We'd love to know where you're from because that helps us frame up what we're talking about. Like, for example, a lot of the stats that we give, we try and talk about the country on these lives because we know we got people all over the place. Obviously, we don't know much about Australia, but we'd love to. And we talk about Michigan too because that's where we're from. We're also licensed in Florida, and we can do business all over in a different conversation. But we want to make sure we're hitting what everybody wants to hear about. So for me, when somebody comes to me and asks that question, there's a couple of things. The first is your finances. We need to take a look at your finances and your goals. Like, is buying now going to be an issue for you? Like, are you going through a divorce and you have to wait? Or are you, in a situation where your credit report comes back? Marco Island, I'm jealous.
Oh,
Um, we're so
that
jealous. I have a friend on Marco
the
Island.
the most beautiful sunset I have ever seen.
It's
Okay,
gorgeous
keep
there.
keep talking.
Yeah.
I can't
If
get
you're watching
distracted
this
with that
after the
sunset.
live, we're getting comments and you can't see them. So we're not
Yeah.
actually crazy. I'm not actually
The
crazy.
No, this person's
Um,
from Marco Island, which if you've never been there, you need to see the sunset.
Absolutely. Um, so now the task is, can I remember what I was talking about? Basically, like, okay, so what are your goals? What, if you're going through a situation like your credit report, that's what it was, comes back, and let's say it's not really good, and the rate that you're going to get is going to keep you from the price point you really want to be in. Sometimes people do need to wait. Sometimes it's not a one size fits all. Sometimes they'll come to you, Cece, and you're looking at that credit report and being like, here's the deal. Give me 3 to 6 months, depending on the scenario, and I'll be able to get you into that house that you want, that price point you want. Right now, you can buy, but your purchasing power isn't as strong as it would be because of your situation. So sometimes it's not just the season. You got to look at, one size fits all doesn't fit everybody.
The overall picture of
Yes,
where and how we're going to get to that goal. Now,
exactly.
you brought up a couple of really good examples, divorce, something happening in your life. You also have the conversation about what type of home that you want and how to get to it. And
Yep.
sometimes I've had clients and you've had clients who's like, "No, I want this house,
Hmm.
this type of house, and I can't afford it." I've actually had to have the hard conversation with my clients and say, "Level up then." I've said that.
Right.
I've had
Or
to
get a
say,
cosigner.
not so much that, but where they were at in life, you could see
Hmm.
that they were in the same job description for
Hmm.
15, 20 years. And they
Hmm.
were talking, they're like, I know I need to get a raise. I need to do something. I'm like, then if you level up to this income amount, you could afford this. Or,
Right.
and then we go through it where I've had that conversation. And the cool thing is, that guy went off and got a brand new job, increased his income by $45,000.
Nice.
And the wife ended up calling, she's like, I don't know what you said to him, but thank you."
Oh, you're her bestie. She's thrilled
I
with
know she
you.
was so thankful because he
Thanks for
needed
talking to
some
my
type of.
husband. Can you do that like once a week?
Yeah, well, he
Motivation.
needed that he needed to see the prize, right?
Yes.
He was comfortable, I don't wanna say complacent, but just comfortable in life,
Right.
great house, great marriage, great kids, the whole thing, and then when they started busting at the seams with the kids, so that was
Hmm.
another scenario. He
Hmm.
needed to level up, and she also did too. I think they
Right.
both worked. So, which is fantastic. But I love the examples that you've given because that starts a framework. That starts that pinnacle conversation of how to get to that closing table. So I'm
Yep.
glad you brought that up.
Well, and the important thing is if you're outside of that and you can, let's say your finances are right, you can buy, you don't have any of those circumstances going on. We've taken a look at what you want to do. So the reason why we typically encourage people to look at buying in Michigan. So someone asked where we're from. So we are in Michigan. Um, Here in Michigan, Metro Detroit area. And for us, the weather plays a big part. Holidays play a part for everybody, right? That's the holidays play a part for everybody across the country. For us, it's kind of like a weather thing. So a lot of people don't love moving when it's like snow, snow, cold, like the ugly, difficult weather. They'd rather get it done in the summer when things are nice, and also school. So people with children that are, attending school, they want to be in before school starts, especially if they're changing schools, because they want their kids to have a chance to go out in the neighborhood, make some friends. That's always like a stressful thing for kids. Like, am I going to walk into a new school and I don't know anybody? That's hard, right? So there's a lot of reasons why people have that push to get in before school starts, so before September, right? I think that's probably similar for everybody across the country. But so in the fall, we start to see, people wonder if they should just, should I just wait until spring? The problem with that thought process is there's a lot of other people that are thinking that because they don't like the discomfort of having to go out and look for a house and potentially move during the challenging part of the year when it's freezing cold and it could be snowing and it could be icy, and nobody really is like, that's not the fun part of going in and out and, doing everything. People don't really like to leave their houses a lot. They kind of hibernate. Maybe not in New York. New Yorkers are different. They will be outside. They are just like, they go for it no matter what. But here, that's what we find. But here's the thing. So take that discomfort of having to go look for a home and possibly move when it's cold and rainy and just gross out, with the fact that you can get the best opportunity. So when you're looking at making a good financial decision, it's like it's worth it to really look at the numbers. And that's what we have to do. Look at the numbers, because where we're looking at prices right now, even though pricing is still up here in Michigan, I know across the country it's crazy, because across the country, back in a few months ago, they were saying it was almost 6% lower, like down. But when you average the whole country, because there's a lot of areas that have huge declines right now, but on average here in Michigan, we're up right now. But when you're looking at pricing, it's scheduled to continue to keep going up. Not, it's not coming down. We don't see that. So what'll happen now is, if you have less people looking and you still have sellers who need to sell, you can get a better opportunity. You can offer less than what they've got it up for, because a lot of houses right now we're seeing price reductions, because sellers unfortunately have not gotten the memo that pricing has changed. It isn't 2021 anymore. It's still going up, but that's for houses that are perfect. Like if your house needs some work, or it needs all the mechanicals or all the expensive things like the roof and the windows and everything, you're not going to get top dollar, because buyers can't afford it, or they just don't want to put all of their money into the house. They want to walk right in and have it ready to go. So if you have that scenario, you can still get top dollar or even multiple offers, but that's just not the scenario for most homes on the market right now. So that's the thing. There's not, a bidding war typically, so you can get a better opportunity. You can pay less for the house and then just refinance when the rate comes down to like a
Well,
better scenario where it makes sense to refinance.
I've seen there's still competitive offers going on,
Mhm.
but the inventory is still the same. It's limited. You're gonna start finding right now. What's good though is a house that you saw that didn't move as fast. Let's give the price point of actually this is just right around the corner for me. The house is listed at 649.
Okay.
Well, we've all kept an eye on it because it's in the subdivision, and now it's dropped down to
Mhm.
590.
Yeah.
Drastic change.
Yeah.
Drastic.
That's a
But
that's a drop down. I had a 650 listing and we sold at 610 in the summer. So I saw it starting to
mm,
happen.
so
It was
this is a
already happening.
one-off. Yeah, it's a one-off. I don't see it as drastic, but this just happened right around the corner where a buyer can come in and say, "Look." Now, I know my subdivision. It dropping, there's gonna be negotiations and whatnot, and they have tons of equity. We bought in at the right time. So they I'm assuming that there's a pretty good, amount of equity in the home. So dropping it wasn't, hurtful. You could just see that they are intentional now, that they're gonna take all offers seriously. That's what that drop means to me. Not desperation, but more serious, like, "Okay,
Yes.
we need serious buyers,
Right.
and this is a time." And it circles back to, should I wait to spring to buy? Should I
Right.
wait? Should I wait? Absolutely not.
No, it's not a good plan, because the thing that's going to happen in springtime, and I hate to even say this because we're going to get to this, the whole clickbait with the feds talking about we're lowering the rate, we're lowering the rate. The rate is lowered 25 basis points. Good morning,
Good morning.
Allie. Good morning, Allie. Allie, something, whatever your name is. Hi.
I'm assuming California.
California. Good morning,
I'm assuming
California.
California. Maybe,
Oh,
maybe
it's
not.
super early in Cali. Look at you up at 7:20. Um, I just lost my train of thought.
Oh, the clickbait
Oh,
for what the
thank you.
feds are
So
yeah, of
yeah, the feds
course.
are legitimately, it is clickbait, because they talk about the rate coming down. But what people don't understand, and what we have consistently said, and I think we're going to mention till the day we die, is the fact that the rate that the feds lower is the interest rate. That is not the mortgage rate. They're not equivalent, and they are not based on the same factors. That rate that they lowered by 25 basis points would lower your home equity lines of credit, your credit card interest rate,
Car
home or
notes,
car notes, personal
personal
loans.
loans?
I don't know if it affects student loan. I don't know. Probably,
No.
right? Oh, it doesn't affect student loans. Okay.
Not that
Um,
not that I'm aware of.
so,
No.
but it's
I
not
only
gonna
know
affect
about
your
savings accounts, your personal loans. I believe that student loans are usually fixed, and that's tied to, the institution themselves.
oh,
I don't
okay.
know, is it fixed or is it
Well,
well,
FAFSA
it
is a
depends on the
federal my kids
institution.
have federal loans. They're federally subsidized, so they have, like, a servicer. It's not the institution doesn't service it. It's FAFSA is, like, federal loans.
Okay, but the
Yeah, so
personal
it's yeah, so I
then
don't know. Well, our loans are federal, and I'd have to look. I thought it was
okay.
attached to prime or to the interest rate, but I don't know. We haven't had to pay them back yet, so that's the thing. I guess we'll find that out. Um,
Hopefully you have a while.
right? So yeah, so that's the thing is that whole like waiting and thinking the rate came down, like everyone keeps thinking they're waiting for this rate to come down, but a lot of times historically over the last 2 years, they've brought the interest rate down, but then they've hiked up the mortgage rate. The mortgage rate has gone up. And I'll let you explain what the mortgage rate is actually attached to. But that's what I want to let people know. Waiting until spring, it's like playing roulette, right? Like you might win,
Mhm.
you might lose because the rate may or may not come down. It may trickle down, but it may trickle down at so small and incremental, but the prices of homes are still going up. So when you actually run the numbers, you're not saving anything and you're probably paying more. And now you could be in a potential multiple offer situation because the people that all waited but still want to buy and sell, they're all doing it at the same time. So now you've got competition. So now you're fighting against other buyers, and hopefully you've got cash to go over offers and over ask and potentially even over an appraisal. So that's really not the best financial situation for you to be in. Only time that's okay is when we had a rate like at 3%, like we did in 2021. People were going 50,000 over and more, but their rate was so low. When they looked and they ran the numbers, it was like, okay, this is still okay. I'll do this because I'm going to be in a 30-year fixed rate at 3%. And I plan on staying, for at least
If
10
the house
years.
appraised,
Right. Oh, but even if it didn't, they were ready to put
they
X
had to
amount over.
liquidate. Yep, they had to
They were
liquidate
okay with it.
assets.
They were
It
okay with it.
it made a lot of sense at the time.
If
And
you're
you
staying in a house, it made sense. Did it make sense if you had to sell in like 2 years? Then
yeah.
no, not so
In a
much.
position of a job that changes locations or
Mm-mm.
you have goals of potentially changing locations, it overpaying for a house was not the smartest idea then. So you brought up the difference. This is long term.
Yes.
It's a long-term game. So talking about long term, this is long-term rates. When the Fed drops the rate, and they dropped it last week by 0.25. When they dropped it, that was the federal rate. Well, remember, that was personal loan, car loan, those type of notes, your bank accounts. We are tied in the mortgage industry to the 10-year treasury. And how
Okay.
that affected last week, there was all this hype. There's all of our conversations. If you go back, you hit the subscribe button so you can see all of our videos. You see us leading up to this point of what is going to happen. Will when the feds drop the rate, how does that affect the 10-year treasury? Unfortunately, it made the mortgage rate, which is tied to the 10-year treasury, bump up. Made
Yeah.
a slight increase, and when I say slight, it was an eighth of a percent. It wasn't anything huge, it wasn't scary, but it did tick up a little bit, and just hearing that, the news went crazy, and that's when I started getting the call, "Should I even buy or should I wait till spring?" That's when
Because
these
they're
calls started.
frustrated. They're
Well,
frustrated.
that's when the
But they
calls
were
started
waiting
coming.
for a rate decrease. So that's the thing. When you have your heart set on what the feds do, you're going to be disappointed. We've already
Oh,
learned this for the last. You will be disappointed. You
absolutely,
can't plan your life based on the rate. You really can't.
and over
If
an
you
eighth
can't
of a
afford to buy,
percent.
right? If you can't afford to buy, that's one thing. Then it's a different conversation. How can we get you to a place where you can afford to buy? What price point do you want to be in? So then you like engineer it, right? Reverse engineer it. if this is the price point you want and this is the area you want, okay, this is where the income needs to be. So then that conversation, this is where the credit needs to be. This is where the debt to income needs to be. And you can help somebody with that. So it might take some time, but they can get it. They can get there. But to wait and do nothing with your own personal life and just wait for this pie in the sky rate to change, it's
And
disappointing.
it's
You're
going to
going
be
to be
minimal.
disappointed. Yeah, it's not going to work. You're not going to get where you want to go that way. It's like believing
It's
in Santa Claus. You
and it's going to be
have a better
minimal.
chance of Santa coming and dropping off what you want this Christmas than you do the feds doing what we'd like them
Waiting.
to do.
Yes.
Yeah.
And it's also the market that changes as well.
Hmm.
They did not like, oh, do we have someone? I-
Nope.
Oh,
You can keep going.
sorry. I saw the ticker go up. It says add a sticker. I don't know what that is, but sure. I got this little notification. But that should be on your side. Continuing with what I'm saying here is that if you're going to wait for that eighth of a percent to go down or go up, you should be in an ish. When you and I sit down and talk, call Holly, message her, she'll message me, and what we'll do, we'll come up with exactly what Holly was saying. Let's get to that goal. What does the big picture look like? Because when we're looking at what you can afford, closing costs, payment,
Yes.
and then when we circle back to the rate, I will give like a medium rate, not a rate quote, but a
Hmm.
medium rate that we can work within. So let's say that at that high of a level of a home that you want, at a medium rate that we're just going to hover in the middle because we're right now, we ticked up an eighth of a percent. Then we may tick down. The economist reporters that we listen to, quite a few of them are saying that we'll get down to the 5.99 area for the traditional 30-year mortgage rate with really good credit. Right now, we're right around hovering low sixes. So we're close. So we're going to be ticking down, maybe ticking up. But what does that picture look like? And you'll see how that rate will affect it. It may affect it by $20 a month. Depends on how big your loan is. If you have a larger size loan in the 600 range, you're looking at a $100 different payment. That may be significant if it's a quarter difference.
Hmm.
If you're looking at a lower loan amount, you don't know. If you have a jumbo loan and you're looking at that 1.2 million, at that point, does it really how much does that affect it? And we'll
Hmm.
have that honest conversation. I'll show you through this really cool program that I made of what that looks like, and you can play with it, toggle it around. Yes, no, maybe so. But I would not hold my breath on an institution that can't even get their numbers right.
Well, and then let's throw this into the mix too, right? Because world issues and the climate and politics and what's going on and all of the headlines also play a part. Right now we're in a government shutdown. I don't know, what are we on day 30 yet? We're close to it if we're not.
We're 34.
34. So, and the longest
Yeah,
one that we've had in history, well, not in history, but Trump's last
35.
was 35. So, and he's working really hard to get them to come to the table. We're not going to go and get into that. But the fact that there is a shutdown does affect some people, obviously, if their income is tied to that. It affects certain loans, which we've already talked about on another, I think, two lives ago. Different
Mhm.
loans that aren't functioning right now because they're fully government backed, and you can't really, they were not even moving right now, so that is also affecting some people, and that's putting a little bit of uncertainty. But the point is that, the government's going to reopen. It's not going to stay shut forever. Like, these are things, but do they affect it? Of course they affect it. People start to get nervous. I look at it like this: if I was going to buy right now, which I'm not, I would want to buy right now. Like, if I was thinking of buying in the spring, I have a friend who's going to get married. She was going to list her house in the spring. She's thinking of doing it right now. Plus, they found a house they really like. But I'm like, do it now, because so many people aren't. So many people are like waiting. When I see a situation where it's like, oh my gosh, people are nervous to buy, good. That means I'm going to be able to put in the offer and get the house.
Get
And I
in,
have
get it.
no competition. Why do I want competition? Why do I want to wait until there's competition?
I moved in during the winter time. I
I have moved in
survived.
the winter too. I moved in November actually, to the house before this. This house I did move in September, Labor Day weekend. I got keys, but the first one, November. It was right before Thanksgiving, and it was actually cold and rainy, and it was not good weather. But I got a great deal, and it ended up being a really good move for me. So yeah, that's the thing. It's like think outside the box. Don't do what everyone else is doing. Like I one thing I
Don't
don't like
listen to
about
the
her.
media.
No, don't
Figure
listen to the
out what
media.
you can
Talk to
do
real estate people.
budget-wise, because
Yes.
that's what speaks. The numbers don't lie. Look
Right.
at that. Now, of course, I say be cautious. Always be cautious. But when you say be cautious, that means you actually have to do your homework. You
Yes.
can't hear a third party that isn't supposed to be credible, was credible at one point, but no longer credible. And
Right.
they have an agenda when they're pushing, oh, the rates, this, that. And I hate it's hard for me to have that rate conversation because sometimes it doesn't make sense for specific reasons. Different loans have different rates, different homes have different rates. I have a client right now who's getting an investment property, but wants a primary home rate. I'm like,
Okay.
okay, this is an interesting conversation.
Yeah.
So
It's
it's
something.
don't live in fear. Let's look at logic. Let's look at the numbers. And then with what Holly is saying, let's look at the market and see what the best strategy is for you. And with my tools and her tools, take those and then have that family conversation of going, okay, should I wait till spring or should I not? And most of our clients actually don't wait till spring.
No, I had
They
that
get it.
conversation where I have probably gonna have more listings this month than normal for November. Just because a lot of people decide to hurry up. And that's the thing. The one thing I don't like about our industry, one of the things I don't like is that we're like on this hamster wheel, and sometimes we're just on a trot, we're just like trotting and we're normal living, and then there are seasons like the spring and summer where we're running so fast we can't even breathe, and then once in a while the wheel stops and you're like, what's going on, and you
Like,
get
wait,
nervous. And it's frustrating because it's like we work so hard and we run so hard at certain seasons. I wish more people would understand and buy during off seasons because you really do get a better opportunity financially in most scenarios. A lot of scenarios. Again, like you said, you've got to look at what's going on. We have to look at what's going on currently with the rate and all the things. But most of the time, when you are buying outside of when there's a ton of competition, most of the time you're going to get a better opportunity, which is a better financial decision. And this is a house you're buying. It's not a dress, it's not shoes. You know what I mean? It's like a big purchase.
can't
So
give
it
it back
makes
right
sense.
away.
Yeah.
Gotta be there for a while.
Yeah, you can't return it. So, you do want to make a really good financial decision and talk to people who understand instead of watching the clickbait, instead of listening to, people talk about the future. Nobody has a crystal ball. Nobody does. We know what we think is going to happen, and there are predictions, and they are educated guesses, if you will. But the other thing I wanted to hit on, that because the government is shut down right now for 34 days, we haven't had an accurate jobs report. So you mentioned the mortgage rate being tied to the bond rate in the bond market, but it's also the jobs report. That unemployment number is also a big factor that they look at too, and we haven't had that. They're not coming out with numbers, and we know that they've been inaccurate for a while. So that's the other
Yeah.
thing. We really do need, we really need them to kind of stop keeping us on hold, because the rate could potentially have gone down, I think, if they would have had, you know, the jobs report and all the other things that they're kind of like holding us hostage with. I feel like we're being held hostage at this point. That's how it feels in real
It's been
estate.
the same thing over and over again, not the correct data. And
Same
y
song on
the
replay.
cautiousness the cautiousness that's coming out of it, these numbers here are not tied to the government shutdown. None of this is tied that we're gonna feel that next month.
Hmm.
that we're not feeling that right now. So as we're talking about the Fed dropping the rate, these numbers are not tied to the current situation.
No,
They're not factoring that in. They're factoring from the past. They're not
fictional numbers that
forecasting.
they've already admitted that those numbers were off. So what they tried to say that, oh, Trump came into office and all of a sudden we have all this unemployment. No, they knew, and Powell admitted that those numbers were off for years, for at least 2 years prior to that. Now Trump basically said, fix this. So they started to fix it and they're starting to see the discrepancy. So it was already that way. They just were inflating those jobs numbers, and which doesn't help anybody, doesn't help anything. So, we're getting more transparency and more clarity. It's one of those like tough love and painful scenarios because yes, we've had a government shutdown for 34 days. So it's painful. We're experiencing a lot of pain. We've got situations where people are in pain right now because of it. But it's one of those greater good. And I guess it's like I want to make sure I say this with kindness. Again, everything that I'm saying is being said with love. But the truth is that these things do have to get figured out because it's what our economy is being run on. And we need some transparency. We need some truth. We need some things to get fixed. Some broken things need to get fixed. And it's taking a little bit of pain to get there, unfortunately.
It is, and the conversation that I've been hearing, and I'm hoping it's true on both sides of the aisle, both sides, that it's expected because tomorrow's 35 days and Thursday will be 36, that things should shift in the next 48 hours to 72 hours. So I'm hoping that's
Let's
the
hope.
case
Let's
because
hope.
as you said, this does oh, hello, Chris, um, from Virginia. With
Love
that being
Virginia.
said, is that we need to move forward and let everything calm down. The
Yep.
holiday season's coming up. We want to have buyers and sellers have a clear mind. Because yes, right now, rural country homes, the rural development loans, that shut down.
Yeah. I
VA
get it.
hasn't been super affected, where the cautiousness came into if we can get your LES. So retired
What's a
military, of course,
LES?
I'm gonna explain what that is. So with the retired, with our retired military, they got paid this whole time. Our active military, they came in and paid at the
Yep.
last minute twice, so they're still being paid, which I'm super thankful for.
Hmm.
So an LES is basically a payroll. That's their version of a pay stub. Well, with the government shutdown, they aren't getting one supplied. So I'm not sure if one's been supplied or not. I don't know if one of our viewers who is active military watching if he received his LES or not. But, we can't do a loan. We have to wait until one comes live to prove his income, and he's under contract right now. So in
Yep.
order to purchase the home that he's actually
Leave an earnings statement.
yes. Did you receive it though?
Chris Webb is
Chris
saying
is saying
yes.
yes. Chris says yes. I don't know about Wade if, his is uploaded or not.
We'll keep going with it though. Yeah.
Yeah. So with that being said, going under contract with the loan requirements, we need to see that pay stub. We
Yeah.
need to see what that looks like. And with the government shutdown, if we don't have that, we have to start looking at different guidelines and how we can get around it. Oh, he said yes. So that's good. So I'll need that for your purchase, by the way.
Hmm.
So with that being said, there's some things like flood we are still not able to run flood findings, but we have the map, and there's some things that the banks are tweaking right now. But the buzz rate at the current moment is that we maybe have 72 hours of this left.
Thank
No
God.
one likes making history.
No, it's not been fun. And the
No.
thing is, someone did comment that, many of us are in pain, and they are. And that's what I always want to say. Like I feel like we're in pain too, even though we're not I'm not an employee. I have felt it because it's been people pull back. So what you guys are experiencing maybe Like, we don't get paid if we don't close, right? So when people pull back and they're not buying, we experience that too. And I've seen that, so my thing to everybody has always been, if you're in a government job, or even if you're not in a government job, right? Because if you're in a government job, you can get shut down. So maybe you're
Yeah.
more aware of it. But if you're in an industry that can be affected, which is a lot of industries, or just
Federal employees are
you never
affected
know
right
what's going to
now.
happen. The best financial decision you can make is the whole Dave Ramsey thing. Have at least, he says, 6 months. 6 months is tough to do. Have
That's
at least
tough for some.
have 3 months reserve. Like, learn from this. We all should. All of us should. None of us are exempt from falling on a hard time when we don't have an income for a period of time. So many things could happen. But like, I feel like it just needs to be said. Like, one of those things we talk about are making good financial decisions. Try to go forward with, okay, when you're looking at a home purchase, because this is all going to fit together, I promise. Don't be house poor. What do we mean by that? Make sure that you're not at the very tip of your budget where, if you did not get a paycheck because you were sick or something happened, that you're not going to be able to afford your mortgage. Like, that's not what we want for people. We don't want you to be in that situation. We want a good financial situation for you. Be comfortable where you can have
Mhm.
like 3 months of reserve sitting there in a savings account, where if you fall on hard times, you have some money to float you until things change. Because with the shutdown, what they forget is they will be retroactively paid. If they're working, they'll get paid. If they, you know what I'm saying? Like, if they're working and they just weren't getting paid, they will be paid. Because my brother he works for NASA, and they get affected by a shutdown. I haven't talked to him this shutdown. Last shutdown, he was like frustrated about it because he didn't get paid during it, but because it's government contracts, right? But as soon as it lifted, they got all their money retroactively paid back. So it's not like
But
you're just
that's
not going to
hard.
get paid. Right. It's not like you're not going to get paid. It just means you got to get through that period of time. So just plan for that. That's the only thing I can say is, don't depend on the government for anything. You should never depend on the government for anything. Like, it's hard in a situation where you need to during certain parts of life. And that feels really stressful for people that need to. But like, what I've learned is, try never to depend on the government for anything, because they can take it away at any minute. Like the whole like conversation with that right now with the SNAP. And I guess Michigan is funding it. What I saw was that Michigan was funding it. I don't know what's happening with that. But I think
I
the states they can do something with that. And then I heard that they were going to find money for it. I don't know what happened with that.
I
I'm going
know
to
it
have to
was
look into that.
called for the states to find it. However, I don't know much about the conversation to speak into
I
that
saw an article, and
conversation.
again, it's an article that said that Michigan was going to fund it, or was going to,
Well, they
put
they
towards it.
they did send money to a lot of food pantries to
Yeah.
help a lot of families out in such cases. I mean, I just went to the grocery store and the chicken I normally would buy was 8.99 and now it's 13.99.
That's
Even if
so
even
wrong.
with the government shutdown, financially, the inflation, financially, like, you just really gotta look at it. That circles back to our conversation of, let's get organized. Let's see what buying a home
Yeah.
now,
Yeah.
in a few months, or if you wanna wait till spring, if
Mhm.
that makes sense for you, that's what we get to have that conversation, and it's a fun conversation. Now, Chris said something
I was just
that,
going to say, I like what he's talking about, having
staying
additional
low
income sources.
on your debt to income. So he
Yeah.
he actually must be in the industry because he knows my lingo. He said DTI, which I absolutely
I think he's
love.
an agent. Chris, you're an agent in another state, right? Am I wrong? I think he's an agent. I think he's kind of
Virginia.
close. Was he Virginia?
Yeah, he's from Virginia. He
Oh,
mentioned
okay.
where he was at from.
Yes, my
So,
brother lives in Virginia, the one I was just talking about. So yeah.
yeah.
Um, oh, he's not in the industry. Oh,
Oh,
okay.
okay. I just love the fact that,
It
debt
was
to
someone
income.
else. Oh, he's an investor.
Oh,
Okay, that's what I'm
there
like.
you go.
God, I
So
remember this
numbers mean
conversation.
So numbers mean a lot to you. You love
Yeah.
Excel spreadsheets. You know what's a return on investment and what's not. And that right there is key. That
Yes.
return on investment, that return on your funds, that monthly payment.
Yes.
Yes, you could be approved at 2,600, but you really only want to stay at 1,900 or 1,800. So you're living within your means and you can live life, go on vacation. Christmas is right around the corner.
Yeah.
So you gotta tighten down a little bit on your spending, but
Right.
other than that, get organized, and then we can answer or help you. Actually, we should not be answering the question. We should help you find that answer for
Yes.
yourself.
The
Should I
balance.
wait until spring to buy
Mhm.
or to sell? Sell, Miss Beautiful Holly here can give you that net out sheet and let you know what that looks like now and where you're at equity wise. Like the house right around the corner from me, I know that they can easily drop that price because they're motivated and they want a serious buyer, and it's okay.
Yes.
They're okay with
Yes.
that decision. Some may
Yes.
not be okay with that decision. They may be like, whoa, that's scary. That's too big of a drop, or if they have to drop it, but that's where that communication comes into. That's where this teamwork comes into, is
Yes.
having that clear transparency. So, to answer the question that we've been discussing, it's based on each individual's goal.
Yeah. And your financial situation. And if it makes sense for you to wait, sometimes it does. Sometimes it makes a lot of sense for you to wait, and sometimes it is just a matter of understanding the numbers and running them. And like Cece
Mhm,
said, if you're also a seller, it's not just what you're going to sell your house at, it's the net. It's what you keep, right? It's the money that you keep after
mhm,
closing costs, because sellers have closing costs. Um, what are you going to keep? What do you owe on the home? Exactly. Let me go through all of that using a number where it looks like your sell zone is where you're going to sell. Maybe it's lower than where I'm going to list you, because sometimes we can try to list, but I always want to give a really accurate number for just in case, right? Like worst case scenario, we sell here, because I don't want to put that pie in the sky number in someone's head and they list, but we can't get that number. That doesn't make sense, right? That's like not doing my job. And a lot of agents will do that just to get listings. I will not do that. I'll have that conversation because I want to make sure you're good with where I believe you're going to sell, not
mhm.
just, or worst case scenario, because buyers don't see the value that we see, right? So that's the most important thing, because then they need that number to go to you and basically say, because you're going to ask them, okay, you're selling, what do you expect to net from the sale of your home? That's typically the question that you ask. So I like to talk to them so that when I send them over to you, oh, CC Holly told me that we're going to have $50,000 or whatever we're going to have. So now you know, okay, let's look at let's look at the debt to income. Let's look at what's going to happen here. Let's look at maybe, your credit. Let's look at maybe, oh, I see like this little credit card right here. If we paid this off, I know we're getting into a deeper scenario, but again, we're talking about what makes sense financially. We pay that off. Now you can do this. So it's so much deeper. My kids say it's not that deep, mom. It is deep. It goes deep. Like there's
This conversation
scenarios
has to be deep.
so deep, and it goes into what is going to give you the best financial situation. And I love that, it's a conversation that you need to have, but people don't know the right questions to ask, and sometimes they get led down the wrong road to talk to the people who maybe don't know. Maybe they're newer, or maybe they just I don't know, aren't knowledgeable, or they don't care. Some people just get paper pushed at them, and and they just get business given to them, and they don't truly go above and beyond, which I think is just doing your job, but they
Yeah,
don't
but
do
that's
it.
not us. We've never been transactional.
No, I don't want just
And
one
that's what that
transaction with
is.
somebody. I want a lifelong relationship. That's
Yeah.
important. That's how we build business. And that's like the relation, because I want them to be like, if they hear that somebody's buying, I want them to be like, you have to use Holly. There's just no
Well,
ifs, ands, or buts. You just have to use her. You have to use Cece. You just absolutely have to. That's what we want. We want them to
if you
feel
get
like that.
nervous, yeah, if you get nervous about anything, you have a legal question. You're going to reach out to your legal team or a lawyer or attorney that specializes in that department. We want to be the resource. We want to be that person that you go to, as simple as, hey, my taxes are increasing. Why? Hey, this is what's happening in my neighborhood. This house just sold for 50,000 over of what I purchased mine 4 years ago, but what does that mean for me now? I'm actually considering maybe moving in a year. What does
Hmm.
that look like for me? We want to be a trusted resource. We
Yes.
want to be part of your team, because the one
Yes.
thing that I can attest to between the both of us and the clients that we share together, and that we've other clients apart from one another, because not everybody wants me as a loan officer. They come with their own, which is okay. It's okay to be wrong once in a while, just a little.
Right. We do have a question. I
But
know
it's
we're
okay.
Yeah, I know we're almost
Okay.
done. So this question, Cece, basically Chris is asking, so he's the investor. He wants it's about DTI and conventional loans. So he bought a place 5% down. I think that's owner occupied. I don't know what owner OC is. Okay.
Yes.
He had mortgage insurance for a few years. It was a low price point, so it was like $30 to $40 extra monthly,
Okay.
which was
Good.
about $400 a year. And he's
Mhm.
saying while it grew by, I think that's supposed to be grew, by about 80,000, is PMI as scary as it sounds to new buyers? So PMI, private mortgage insurance, for people who don't know, if you don't put at least 20% down conventionally, you're going to pay mortgage insurance until you hit that threshold. If you're FHA, you're going to pay it the entire life of the loan. So Cece, what are your thoughts on that? So it's conventional. So that
So
means it's going to fall off at some point.
grew by 80, yeah, 80,000. So that's what he did mean. Okay, so putting 5% down, when there is a formula to a conventional FHA, so private mortgage insurance for conventional loans only goes until about the 80, that seven, technically when you purchase a home, 80% one, his credit's good. It's a primary residence, as he said. And the loan amount was, and I'm assuming, was a little bit on the what, about 250,000 or smaller, maybe ish. You should go ahead and answer that question for me. But putting 5% down, only that PMI is $30 or 40. If you put 10% down, that'll drop down to, that could potentially drop down to, yep, there we go, 212,000. So that made sense right there because it's a percentage. Now, every time it goes down, if you put more down, but $30 a month just to put $5,000 down. Do you remember a conversation from a couple weeks ago? And I'll remind everybody who's on here how we're saying, if you buy down the rate, does that make sense? Same conversation, okay? Same exact conversation. If you put 5% down of this loan and you only have 30 or $40 of that mortgage insurance that's there, or do you put 20% down and have none? Does that return on investment make sense? Now, it depends on the loan size. Here, if you wanted to keep your liquid assets in your bank account, that right there of having 30 to 40, I would say at that 212, I'm shocked it wasn't $47, $45 or $42. I've seen it more in the 40s, at least with my company at that price point with that percentage down. So I would say about 47. Just spending that 42, $47, that's a night out. That's not gonna make or break your budget, but it
Right.
is something to consider. You should take that into consideration because that is $42 and it does add up, just like what Chris said. For him, it did add up, and for saving $400 a year makes sense.
So doesn't it take about, how many years was it again to get about, I'm trying to remember how many years in a mortgage, because in my mind I'm trying to run the math for, I'm using his number of 400 a year, and I'm thinking, how long does it take to get that additional 15%? Is it 10 years or
No, I
so
would not
ish?
put a timeline on it. It depends on
Okay.
the city, location, location, location. The moment
Right.
that the equity gets there, it's the equity. So let's say that
Right.
you bought the house in 2018 and everything shot up and you had private mortgage insurance in 2018 and all that equity grew in 2020, 2021,
Right.
2022. You can now contest it and say, I think I'm over that. I'm below 80% in my equity. Please take this away and
Yep.
challenge it.
Yep.
That's a good thing. So
Because
with
they don't always
his,
just drop it for you.
yeah. So Chris, to
You
answer
got to
your
watch it.
question, the conversation, I will present it and I'll show it and I'll show those numbers. what that looks like, the difference of putting 10% down and that monthly savings of a whole $10. What does that look like for the client? And that's where that one-on-one scenario really makes sense in seeing the numbers. And as I stated in the beginning, numbers don't lie. It's not my opinion, it's the numbers. And you can see it with this spreadsheet. And I love that you're an investor because I have an investor spreadsheet that I absolutely love. Holly finally got to experience it for the first time just
Yes, it's
recently.
great. Oh, it's so
And
helpful.
well, and it helps you understand the return on
Yes.
investment
Mhm.
of a potential short-term or long-term rental and how that look like. But again, it comes down to the budget. For you, Chris, most likely that $30 meant nothing. That probably didn't even phase you, most likely, because guaranteed, just hearing seeing your questions here, you already purchased a house on the low side of the subdivision, probably rehabbing it, gonna live there for a while, and will potentially sell it at the high point. If my guess is correct, I think that's the what you're going to be doing there in Virginia.
Yeah.
But yeah, it matters to brand new home buyers, but only
Mhm.
to a certain degree if we're within their budget and they have that budget conversation. It is a fixed payment. It's not like your taxes. Your taxes are gonna change every year. Your homeowner's
Mhm.
insurance is gonna change. If you're in a condo, your homeowners association dues are going to change. PMI will not until you can get rid of it. It's one flat fee unless you refinance or you contest that you have enough equity.
Yeah. Yeah.
And I'll
That's a
run those
great
numbers. Does
yeah,
that
and
make
that's
sense?
such a good question. I'm glad that he brought that up because we're always open to questions. We always tell people, ask us questions, or even if you're watching the replay, put the question in. We'll see it and we can
Yeah.
talk about it next week because we're live on Tuesdays, either at 10 or 11. Today it was supposed to be 11, and we did 10, but it's either 10 or 11. Here's the big solution to that problem, guys. Just hit the subscribe little bell, tap that bell for the notifications. That way you'll know when we're live. And sometimes we're 10, sometimes we're 11, so it's been back and forth. I think we put it for 11 going forward. It's supposed to be 11 today, but we need to move it to 10
It's the
one more time.
industry. It's
One
the
more time.
industry. I know
Right.
I had to take a client call, it's an emergency call at 11. So, Holly, thank you for being so patient with me and changing
Absolutely.
our schedule because I have to what time is it? Because I definitely
Yeah, you
have to
got to
get
get
on the
going then.
phone.
So, like Cece already mentioned earlier, if you're coming on late, all of my
Okay.
contact
Oh,
information is at
2
the bottom
minutes.
of this. You can reach out to me and I'll get you Cece's information if you've got questions. We're licensed here in Michigan. We live in Michigan. We're also licensed in Florida, and we have a network throughout the country. So we're also great referral sources for you anywhere you live. Virginia,
Mhm.
Chris, you can reach out if you have questions on anything or need a great agent. I know a lot of great agents in Virginia. So that being said, thanks again, Cece Machieski, for joining. And we look
Yes.
forward to next Tuesday being live again. And everybody have an amazing week and be blessed.